Carole Nakhle, CEO, Crystal Energy. Carole, good morning. Thank you so much for joining us this Friday morning.
Hello, Alex. Well, I have to say good evening because I'm currently in Abu Dhabi, and it's a great pleasure to be with you again, Alex.
Carole, good evening then. Happy to have you on the show. First time 2022. Happy New Year, Carole. And of course, I cannot not ask you what is driving this bullish trend when it comes to crude oil prices. All equities are selling, Europe, US, everywhere. Crude oil up about 1%, both benchmarks.
Well, if you remember, in December, we had a deceleration. Actually, after October, we saw kind of peak prices for that year, and then the kind of prices decelerated after that, especially as news about Omicron variant spread around the world, because the market was worried, first of all, about the severity of the variant, and second, about government responses around the world. And it turned out that so far Omicron was much milder than many people feared. And second, even in countries where we saw greater restrictions on travels and mobility, particularly in Europe, in North America, the restrictions were not as severe as feared. So for example, the isolation date, instead of 10 days, you reduce it to 5 days. And this kind of improved the confidence of the market in oil market outlook. That said, we have to remember that we're not still out of the woods yet, because if you look at Asia, we're seeing a deceleration in the mobility, in the travel, and really we have to wait and see to what extent will that translate into downward pressure on prices.
On the other side, what do you answer to all these bull calls, very bullish crude oil calls, $100 per barrel in the first quarter of 2022?
Well, I would be very careful. You see, I studied the oil industry for decades now, and often, I mean, you may hit the jackpot once or twice if you're really lucky, but often these kind of expectations tend to be proven wrong, and particularly for this year. So you may have, of course, you will always have the possibility of price spike, but the big question is, first of all, what is the average price for the rest of the year? So you can see the forecast don't really meet this kind of three-digit prices. And second, if you do have spikes, are they going to last too long, especially when you have more supplies coming to the market? And also, even for the demand outlook, you wonder whether we're going to see this massive growth in demand. At the end, we're comparing it relatively to what happened last month. So I'm more on the cautious side than, you know, sharing the bullish optimism of Wall Street.
I just wanted to have a very quick check on the natural gas market. For instance, we do have the US benchmark off about 2.72% and the European benchmark up about 4%. So why this difference in terms of performance of the two benchmarks?
Well, pretty simple, because first of all, even though with LNG we're having a more globalized gas market, but gas markets will still remain today a regional affair. So you do have major gas markets in North America, in Europe, in Asia. LNG, liquefied natural gas, is making them more connected. So in the past, if something happened in Asia, we wouldn't worry about it in Europe. But today, because of LNG, no, there is some kind of connection, but still not really a fully globalized market as is the case with oil. And therefore, if you look at North America, you don't have the same pressure on supplies as you do have in Europe. So in Europe, you have lots of factors that came to the picture, including Russia not limiting its supply. So we heard recently the head of the IEA pointing the finger at Russia and blaming it for exacerbating the current gas crisis in Europe. So you have lots of geopolitics as well happening in Europe. And this explains a kind of differential that you see between North America and Europe.
In fact, when it comes to the IEA, Fedibros accuses Russia of worsening Europe's gas crisis, and this was pretty tough one. What's your take, and do you think that this is the real reason for the energy crisis that we are witnessing here in Europe, which is pretty tough, I shall say? We all feel it very strongly, like citizens. This is not a market anymore. This is not a futures market anymore. This is citizens' issue.
Oh, definitely. And this is the worst period you want to experience high energy prices coming out of an economic crisis where people, many people lost their jobs. People are struggling with high inflation everywhere. So it's not really, and I mean, it's never ideal as a consumer to pay higher prices, but particularly today, it's pretty tough, as we saw, for example, the protest in Kazakhstan, although it was on oil products and gasoline, etc. But today, more than ever, I think in Europe, you have, it's difficult to single out one factor. So I would say, although the Russian factor plays an important role. It would be simplistic to simply say blame it all on Russia. Of course, Russia can help to alleviate the crisis, but Russia is trying to tick several boxes: the commercial box, the geopolitical box, and at the same time, you have competition for LNG in Asia. You do have the, I would blame partly, although you have to be careful and fair, the climate change policies because of discouragement or discouraging investment in fossil fuel at least as a backup. So if the wind is not blowing or the sun is not shining, you do have a backup. So you do have a combination of factors that came together. A harsh winter last year in Europe, which also drained the storage in the continent. So all these, and on top of that, if we believe the IEA and we take what they say, as accurate, that Russia could easily put in the market a third more additional supplies, then you add to that Russian deliberate attempt to reduce its supplies to the continent. As a result, you have these higher prices translating into more economic burden on the consumer.
So overall, going back to the crude oil market, are you positive for 2022 as is, for example, OPEC, or as traders are seeing the prices?
Well, look, from a consumer's perspective, I wouldn't like to see prices increasing any further because higher prices are no good for consumers. It's basic economics. From producers' perspective, of course, you may see higher prices as benefit, but at the same time, this is where the Saudis have been quite, I would say, conscious about the potential detrimental impact higher prices have on demand, on the economy, because it simply leads to demand destruction, and this is not what you want to get. So on balance, you might see upward pressure on prices this year, which might well ease the following year because of additional supplies, but it's not necessarily in the producer's benefit to see high prices for a bit longer, because again, that might lead to short-term benefits, but long-term losses.
Thank you very much, Carole Nakhle, CEO, Crystal Energy. Thank you for joining us, and have a great day ahead. Have a great evening. Sorry, have a great evening.
Thank you, Alex. Same to you. Take care.